Hello everyone. Finally, yesterday, August month's MSCI index rebalancing was completed, and the regular viewers of this channel might remember this. We have been discussing about this from June onwards. So in this video, we are going to discuss about that first, and then we will see our regular pre-market report video for today, 14th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Just a bit of quick background. In India, on the private banks, for the foreign investors, it is allowed to invest or they can hold the shares up to 74%. Then usually for the MSCI index, if the foreign shareholding room is at least ideally 20% and theoretically in this case above 19.01%, then they will use the adjustment factor of 1 for calculating the potential weightage for the selected stock in their MSCI index. So before last 2-3 months, always foreign investors had the HDFC Bank shareholding of above 55%. Hence, not yesterday but before that, MSCI index used the 0.5 adjustment factor for calculating the HDFC Bank weightage in the MSCI Emerging Market Index, which came as roughly 3.8% weightage. Then in the last 2-3 months, HDFC Bank had been facing enormous foreign investors selling pressure. Hence, as expected, during the quarterly results time, the foreign shareholding in the HDFC Bank was down below 55%. Exactly, it came around 54.83%. So in the last 1 month, including myself, there was a wider expectation that HDFC Bank's weightage in MSCI Emerging Index is to double, as it now eligible for the adjustment factor 1. And as per Nuvama, if HDFC Bank weightage doubled means then that will bring near 3 to 5 billion US dollars worth of investment into the HDFC Bank alone. Hence, in the last 1 month, market had been speculating about it. And then yesterday, August 12th, the predefined date for MSCI index rebalancing, because the room for the foreign investment is very marginal in HDFC Bank, the people who do this index rebalancing, they said they will do it in 2 steps. Step 1, in coming this August 30th, the predefined date for MSCI index rebalancing implementation, they will increase the adjustment factor for HDFC Bank from 0.5 to 0.75, not 1. Then again, if the foreign investor available room is still around 20% means, which will come to know in the middle of October, then on the November index rebalancing meeting, they agreed to further increase the adjustment factor from 0.75 to 1. Basically, they are going to increase the adjustment factor if the condition met means, there is no doubt, but instead of 1 go, they are going to do an 2 go. First, this coming August 30th, half of it, then the conditions met means then again on the November month. Hope everyone can able to follow me. Is it bad news? I think temporarily for 1 or 2 days, I guess. I mean, please don't mistake me. HDFC Bank has inherent issue which is high credit to deposit ratio of 109%. For a healthy banking condition, it has to be around 80%. So its CEO itself on the HDFC Bank AGM mentioned that he wants to compromise the bank's growth for getting to reduce the credit to deposit ratio. Hence, if there is a sell-off in HDFC Bank means, it should be because of its fundamental reasons rather than this low MSCI index rebalancing issue. So I think yesterday's sell-off is just a knee-jerk reaction from the traders. On top of that, still on this coming August 30th, the MSCI index is going to increase its adjustment factor to 0.75 from the present 0.5, which in turn, according to Nuvama, expects to bring approximately 15,000 crore rupees into the HDFC Bank stocks, and it's roughly equivalent to 1.1% of the total free float or 9.3 crores HDFC Bank shares. Hence, from the demand perspective, it's positive only. I mean, if you ask me, I would be worried about HDFC Bank's Nifty's weightage rather than its weightage in the MSCI index. Since quietly in the last 6 months, NSE had been reducing the HDFC Bank weightage in Nifty index to 11% from earlier around 15%. And in the same way in the Bank Nifty, NSE reduced the weightage to around 28% from 6 months ago 35%. Just for info, the next NSE or Nifty or Bank Nifty rebalancing date is September 28th. Hence, please note it down. So as I said yesterday, it was just a knee-jerk reaction. Hence, HDFC Bank share price dropped 3.5%, which was the prime factor for the whole market negativity, especially when the global momentum was good. Anyway, let's move to the US market. All the macro data related, whatever released last night in US was in favor of the market. I mean, the wholesale inflation data on monthly basis in both metrics, core haven't increased at all, and overall increased only 0.1% in July month compared to June month. Both of them lesser than what market expected. Similarly, on yearly basis, the core inflation increased only 2.4% and the overall one much better 2.2%. Hence, because of this very positive macro, so all the three US major index closed on the super positive note. Dow Jones increased 1.04%, S&P 500 up by 1.68% and Nasdaq increased to 2.4%. In case of VIX, it dropped 12.5% and moved around 18 from near 21. However, that US market positivity didn't transfer completely to GIFT Nifty or to Indian ADR. I mean, early morning today, GIFT Nifty only increased and closed at 24,218. Equating it with the spot market, it's indicating the gap up opening of 50 to 70 points. Then about Indian ADR, only the IT stocks closed on the positive note, whereas for banks, it just closed negative, roughly same percentage as yesterday's Indian market close. So clearly, IT stocks got the fresh positivity, whereas for banking stocks, I wouldn't say it's negative, I would say ADRs don't have any fresh movement indication. Then regarding oil, this high US wholesale inflation data and OPEC countries' future oil demand report both influenced the oil price to down near 1%. At the time of this video, WTI crude trading around 78.5 US dollars per barrel, whereas Brent crude trading at 81 US dollars per barrel. Apart from this, I just want to highlight one thing. Yesterday too, FIA was net sellers. They net sold for 2,100 crore rupees, and as usual, DA was net buyers. They net bought for 1,240 crore rupees. As a summary, global momentum improved massively. IT stocks definitely positive. Regarding banks, I personally think this MSCI rebalancing thing would not affect, but ADR market saying a different story. So only time will tell. Moving on, as per the stock open interest, HDFC Bank, SBI, ICICI Bank, Kotak Bank, Bata India and Aarti Industries got an increased open interest along with a negative close indicates the short build-up. On the other hand, Marico, Torrent Pharma, Britannia, TVS Motors, HCL Tech and Apollo Hospital got an increase in open interest with a positive price close indicating the long build-up. Then about the things to look out, during our market time at 11:30 am, UK's consumer inflation data, then at 2:30 pm, Europe's GDP growth and industrial production data is scheduled to release. Then in night for US, very important, US consumer inflation data for July month and weekly crude oil inventories are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened flat and was unable to hold the 24,300 mark due to increased selling pressure and finally closed at around 24,140. Thus on the daily chart, Nifty formed a bearish candlestick pattern following a high wave pattern in the previous session. In addition, still RSI and MSCI momentum indicators are in the negative territory, so everything technically indicating the continuation of negative sentiment. I mean, as long as Nifty holds below 24,400, it might remain in consolidation and range bound mode with a support of 24,000. Hence, a breakout on either side 24,000 to 24,400 is expected to determine the Nifty's next direction. In case of Bank Nifty, it opened 140 points gap down and underperformed Nifty, finally fell below 50,000. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a long bearish candlestick pattern with a negative bias in the RSI and MACD momentum indicators. Here, the important thing is, now Bank Nifty moved closer to the 50% Fibonacci retracement level 49,700. I mean between June 4th low to the July 4th record high, which generally act as a crucial support. And below 49,650 to 49,600, we might slide further towards 49,000 to 48,850. Whereas on the upside, immediate resistance is at 50,250 to 50,300. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,400, with maximum new call option writing at 24,300 strike, followed by 24,500 and 24,200. On the put side, the maximum open interest was at 23,500 strike, followed by 24,000 and 23,000, with maximum new put option writing at 23,900 strike, followed by 23,500 and 23,700. Thus, from options data, 24,200 to 24,300 is the immediate resistance, with immediate support at 24,000 to 23,900. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.